the buy the dip trading guide and what not to do. This is a very popular day trading strategy out there, and maybe you've done it before, maybe you've observed it, but I want to put a little twist on it and look at it from the angle of, yeah, this is what you don't want to do. And to best illustrate this, I want to walk you on a little story of a trader, and we'll see the actions that they make and why on the surface it can seem like a valid strategy, but beneath the surface, all it's doing is actually setting you up for ultimate failure, in many cases, very painful ways. So let's get into this story and begin the guide of what not to do. So we have our trader and he's got $100 and he decides, I want to go buy the dip on TLRY. So you can see right here, TLRY has begun to pull back, or in other words, the stock is dipping. So he wants to buy that dip. And let's just say that he buys, right there at that candle. And the stock drops, and then it drops some more. But of course, what's he saying? What is the echo chamber saying on social media or message boards or Reddit or what have you? They're all screaming, diamond hands. So yeah, he's got those diamond hands, and yeah, it keeps dropping, but he's got those diamond hands and it drops some more. So what he's saying though, hey, I got those diamond hands. So he's holding, and then you can see the price curls back upwards. And eventually he goes into the green, and it turns out to be a nice profitable trade for him. So after that trade, he takes that $100 and he turns it into $200. Now real quick, I know what you're saying. Clay, what are you talking about? That wasn't a 100% gain trade. You're right. The core concept here that I'm trying to convey is that traders take a certain amount of money, in this case it's just $100, but then they buy the dip, they get those diamond hands, they hold and hope, because hey, stocks always go back up. The stock does go back up, and now they've made more money. So that's the concept that I'm trying to convey here. But you're right. As far as a mathematical standpoint, good observation. Wow, Clay, he just turned 100% profit. You're right, but that's not what I'm trying to convey here. Just took some money, created more money with it. Well, that was a successful trade. So of course our trader's going to make another trade, but think about it. What did he just do with TLRY? Well, he made money, which by default means that he now has more money for his next trade, which is going to be Tesla. So here we have Tesla, and again, the stock makes the big move up, starts to move downwards, so he buys somewhere right around there. He's buying the dip because it comes back down, so let's see what happens. Next candle, the stock dips even more. There, the price goes down even further, but he's got those diamond hands. And then all of a sudden the price does curl back upwards, and just like that, he has a very nice trade on his hands as that thing continues to push higher and higher. So as we just saw, Tesla, because of those diamond hands, he bought the dip and then it dipped quite a bit more, but he had those strong diamond hands. So he went and now he's got $400. Now let's be fair. Because this trader is a rational human being, what is his default logic going to be? His default logic is going to be, wow, this is a really good strategy. Wow, I'm really good at buying the dip, and I'm really good at holding, being patient, and just waiting for the stock to curl back upwards. Yeah, it's working, and I'm really good at it, right? That is the valid thought process. In other words, it would be irrational for this trader to say, wow, that's 2 winning trades in a row. Wow, I bought the dip, I held, and then I made money. I'm doing something wrong. Something's just not quite right. Right? That would be irrational to arrive at that conclusion. So this trader is behaving rationally. He's making trades, he's winning. So why would he change anything? Why would he do anything differently, right? Because that would not make any sense. And that's why the markets are tricky, because they'll give you rewards and they'll lead you to rational conclusions, but yeah, you know what? There is always more to it. So let's continue on with their journey. So now our trader has, well, a whole lot of money after that Tesla trade. So this time he sets his eyes on BURU. And what is he going to do? Well, he's got all that money. It's been working. He's a rational person. So let's put it into the trade. So we once again have the stock. It drops all the way down. It is a monster dip. Big candle down. And they go ahead and buy right there at $5 because, look at this huge dip. Things will go back up. This is going to be an absolute fantastic alert and fantastic trade. So you can see just consolidating out, then begins to dip, then begins to dip even more. And now it's at $3.50. But you know what's coming, diamond hands, because everything will be okay. And it starts to go back up. And who knows, maybe he didn't use all that money at first, so maybe he's going to add some more to the position. So he buys some more because he had that extra money. So he adds to his position down here around 375. It drops some more. And now it is down below $3. But he's got those diamond hands. So it continues to drop. And continues to drop. And now this thing is down below $2. So just, let's say he decides to buy some more. That remaining part of that amount, he has bought some more because he's got those diamond hands. And I know I'm going fast, but we're covering several days here. But now, yes, you've noticed that, right? It is officially down below $1. First buy at $5, then $3.75, and then another one right around $2, let's say. Cruel move right there. Got his hope back up, rolled right back over. And you get the idea. This thing has drifted down into oblivion and is now just chopping around below the dollar mark. So what has happened to this trader and all those gains? They are gone. His gains are gone. His gains are severely wrecked. Or who knows, maybe he's completely out of money. Maybe his principal is disappearing. So what's the point here? The point is very simple, but so many people miss it because the market loves to tease you, is that nothing is guaranteed to go back up. Yes, I'll be the first to admit, a lot of stocks after they dip do go back up. And if you hold and hope, if you have diamond hands, you will be rewarded. I can't deny that. In fact, I would probably go as far as to say most times that will happen. Most times you will be okay. But all it takes is one or two trades, like the one you saw here, and the wheels completely fall off, especially if you add to that losing trade. Because there's going to be those stocks or coins, whatever you're trading, where it just doesn't go back up and it drifts into oblivion, which completely destroys all those gains that you've made. So I have no problem with buying the dip. But what you don't want to do when you buy the dip is approach it with the attitude of, hey, things always go back up as long as I have diamond hands. And you don't want to go surround yourself with an echo chamber that's telling you diamond hands, diamond hands. That's all you see. All you hear are justifications of why everything will be okay. At some point, you've got to put a line in the sand and say, you know what? If it crosses this line, it is no longer a dip. I have to get out. And if I have to get out with a loss, then so be it, because that's part of being a trader. You're going to lose money. You just want to make sure that when you lose it, it's within a controlled way. But if you show up with the very simplistic attitude of it'll curl back up and then I'll be okay as long as I have my diamond hands and me and my fellow brothers and sisters in diamond hands, everything will be okay. That's just what you don't want to do. You've got to have a strategy in terms of when do you wave the white flag. So I have no problems against buying the dip. That's a great way to find risk reward scenarios. But you've got to be able to define, and you've got to know how to define where you're going to wave that white flag and say, you know what, this is no longer a dip. This is just a flat out reversal, and I don't want to get dumped all over and become a bag holder with my diamond hands. So this is what you don't want to do, because if you've been there before, you're not alone. But that's the way the market works. It takes rational conclusions, causes you to put more and more money into trades, and then there's one of those nasty ones waiting along that just completely wrecks all the progress that you've made. So have you ever done this before? Have you ever bought the dip, had diamond hands, and then the price just keeps dropping? I have. So there's no judgments on my part. We've all been, well, I shouldn't say we've all been there, but many of us have been there. And if you've never been there, well, then I hope this guide helps you in regards to what not to do. If you'd like any other guides on things, let me know. Give me suggestions down in the comment section. I'd love to hear what you have to say. But yeah, get out there, be disciplined, and this is what you don't want to do when it comes to buying the dip. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.